and a warm welcome to yet another episode of Market Views, where we talk about all things stock markets. So mainly we focus about the Zimbabwe Stock Exchange and the Victoria Falls Stock Exchange, which are our main bosses in Zimbabwe. Well, a lot has been taking place in the retail sector. At the start of 2025, we saw OK closing 5 of its branches, and for the month of January, it lost 43% of its value in terms of market cap. So the year started with OK Zimbabwe having about 17 to 18 million, and at the end of January, it actually reached around 9 to 10 million. But as we have seen in the press, there's been some leadership changes that are taking place, with the former CEOs actually now retaking to actually steady the ship going onwards. And for the week ending 27 February 2025, we saw OK Zim share price actually increasing by 16%. But in contrary to that, Ecoach Holdings, which we have seen Tawanda Nyambirai, which we have increased his shareholding and become the new CEO, we saw the share price of Ecocash actually declining. From 10 February 2025, the share price was at around 26 ZiG, and currently it is hovering around 14 ZiG to 15 ZiG. So basically we want to deep dive into some of these things. As always, just look at the corporate rescue plan of Truworths, which is one of the entities of the 5 corporates that were placed under corporate rescue in 2024. So we want to look at what are the impacts and what are the effects on the shareholders, the creditors, and the management. And joining me today on set, I have my fellow analysts. So allow me to introduce them one by one. As for me, I'm Kudakwashi Taimo, your host, and joining me on set is Ian Banda. Ian, welcome on set.
Thank you. It's my pleasure to be here.
Yeah, thank you. Our pleasure. And I also have Tapio Nashe Kusereka on set. Tapio, welcome on set.
Thank you. I'm glad to be here.
Okay. So, gentlemen, let's start by looking at OK Zimbabwe. So we have seen actually there are some changes in the leadership. We saw the former CEOs, Zreva, who is actually becoming the new CEO, and also we saw the former CEO now joining in as the CFO, and also the changes in the supply chain manager. And for the week, like I've alluded to, the share price increased by 16%. In your view, what do you think has led to this price increase? Is it sustainable? What are just your overall sentiments in these events?
Thank you so much. If we look into those management issues, it's very clear that the issue on the decline of the market cap for OK and the struggles of OK mainly emanating from management issues, especially, and I do believe that there was no a proper succession plan in 2021 when the outgoing management took over, and those management which were there during the prior period before the incoming board of Zireva, they were young and they were not that used to macroeconomic problems which marred our economy. Because if you check those new management, especially the CEO was with the company since 2001 to 2017. And if we are to look on that period, you see that that period was marred with different episodes of economic problems like hyperinflation, introduction of US dollar, which is dollarization, and a lot of problems like political issues. So those are experienced managers. The management are quite experienced. They know how to navigate in hard situation. So I am quite sure an increase in stock price is sustainable given the ability of the upcoming management and how their ability to navigate, especially this trying time, because We have been in these problems for a very long time, so we should have a way to navigate without complaint of facing issues like liquidity issues, like past fiscal issues, like fiscal problems, and all monetary issues.
Okay, thank you. So if I'm to be, correct me if I'm wrong, but I'm picking that you give positive sentiments on the management that is taking over based on the experience that they've gained over a lot of years that they've led. But if one is to ask to say for the current period, even going forward, how sustainable is it then? Because obviously the succession plan, there has to be new blood, they have to be trained in obviously taking over post more of these guys. What's your take on that?
I think it depends with how they are going to manage the transition after the caretaking period of 6 months for these guys which are incoming with the new blood they are looking for. It depends with the caliber of the new actual CEO which are coming on board after six months.
Okay, interesting. Thank you. That's an interesting perspective. Now, Ian, let's look at Ecocash Holdings. Surprisingly, in contrast, we have seen the share price actually declining ever since the circular was published of Tawanda Nyambirai actually becoming the new CEO, and we've also seen some of the directors having been reshuffled. But the share price have declined, I think, over 80% for the past 2 weeks. What's your take there and your overall assessments? What do you think led to the share price decline? And moving forward, what sentiments are you picking from the market with regard to these issues?
Thank you, Koda. I think looking at the share price decline of Ecocash, people were just caught unaware. We just woke up to an announcement by Ecocash to say that the board has reshuffled, Tawanda Nyambirai bouncing back as the new CEO.
Yeah.
So as the market, people are still trying to digest the news, and they are not really sure of where the company is going, because I think now what we have is only the Stewart Bank, which Tawanda Nyambirai founded. But then the question is, in investors' mind, is why did he sell the bank first of all? And why is he buying it now? And going forward, people want to know, is the bank really sustainable? Will it achieve the good numbers? Because as analysts, I would like to think that the fintech business was giving more to the top line of Ecocash revenue. So now the fintech business has moved to Ecocash, and now we are left with the bank. And with the current economic crisis that we have in the country, we are not really sure how the bank is going to navigate that crisis. What will be the top line look like come end of year? So I think investors are just holding, what I can say is just a pause for the moment, just trying to see what is going to happen. And also looking at the history of Tawanda Nyambirai, he started a lot of companies before.
Okay.
But little is really known out there, especially with investors. I think most of us are familiar with TN Asset Management.
Yeah.
But the other companies like the furniture business, TN Grill, the TN Kettle Bank, what really happened to those companies? We are not really sure. We don't have all the information to actually ascertain, is he a good CEO going forward? So everyone just wants to see what the future will be like with him at the helm. Then I think if there are positive outcomes with his tenure, we'll see the market cap actually peaking and the share price improving.
Okay, no, that's interesting. We have seen him actually providing some bit of positive sentiments to the market when he was highlighting the intention to streamline some of the workers, actually pointing out the issue that it was overstaffed, and also how he intends to actually make it competitive on a global perspective. So if I picked what you're saying correctly, are you saying people, as of now, they are not putting their money on his words? They are waiting to foresee how you'll be taking over, taking into account that currently there's still asset management, which is also funds now. So how are people taking this?
I think actions speak louder than words.
Okay.
You might present a plan, but how you are going to actually operationalize the plan is what us as investors want to see. So I think people will wait to see what's going to come in the next 8-9 months, how the company is going to improve. Are there going to be any efficiency issues or teething problems with the new management? Because if 8 directors leave the company, there's going to be a transition period. So you want to be pretty sure before you put your money on Ecocash. See how the transition is going to take place. Because Tawanda has promised a digital bank. He's saying he wants to transform it more into a digital bank. You want to see how he's going to do that. And I think if he succeeds, obviously the market will respond positively.
Wow, interesting. Now let's look at the clothing retailer, which is actually delisting from the Zimbabwe Stock Exchange. That's Truworth, which was placed under corporate rescue in August 2024 when it had net liabilities which were close to $1 million, right? It was one of the 5 corporates which were placed under corporate rescue. And recently we have seen the corporate rescue plan which was approved with Valfin Investments actually overtaking the group, being the new investors, and obviously shareholders, creditors, and the management being treated in different ways. Well, I'm just at this point, I want to allow both of you to just get to know what are your overall thoughts on the corporate rescue plan, if you are to say it maybe in 30 seconds to a minute.
Okay, thank you. I think it's a good plan to take over that company Truworth, given the unmarketability of it. The company, it was very unattractive to investors, especially if you check the selling price of $1. What it means is that that company was heavily leveraged and it was in debt distress, which increased the capitalization rate for a company and increased the cost of capital for the overall company. So I think for restructuring purpose, that purchase of Truworth is a good move, especially with a perspective of restructuring, especially on debt restructuring, on dealing with other.
A good issues. Move in terms of the shareholders' perspective, creditors, management, or the actual investor?
The actual investor.
Okay. Interesting perspective. And your thoughts, Ian, on the overall corporate rescue plan? What's your sentiments?
Okay, thank you, Kuda. I think the shareholders are the losing end with the corporate rescue plan because the whole company was just sold for $1. Yeah. So if you look at Mega Market, Truworths International, who hold almost 2/3 of the company, their value was just wiped out to zero. Yeah. But then at the same time, they are to blame. When you have controlling interest in a company, you should hold the board accountable to protect your investment, which I think they failed to do. If I compare it with Edgar's, so we saw in 2023, Edgar's, there was some shuffling in the C-suite, which I believe the board saw it prudent to actually say, we are not going forward with these guys, despite the problems that we are facing in the textile and clothing sector. I think we need a change of management and a new captain to steer the ship, and I think Edgar's has managed to do that. But looking at Truworths, the management wasn't really put to task. The board let the company crumble. Then on the overall rescue plan in terms of business going forward, they are saying they want Truworths to be a high-end store with the 8 stores that are left in the country. I don't know how that will be possible because looking at consumer spending and the we have seen that Zimbabwe, now we have a lower middle class. So if we have a lower middle class, what about the top class? Who will afford those clothes? They are saying topics will be a middle class, but
And then number one,
which is only one store in Ishtumbiza.
Okay.
Looking at Edgar's, they have actually said we want to cater for the low income earner, because people's disposable incomes, they are now very low. So you need to cater to that. Have prices that are almost equivalent to the runners that we have, to the flea markets, so that you compete on the same level. And also the second-hand clothes guys. So I think their strategy, for me, I don't see it being as sound. I would have thought that they would have tried to cater for the low end, then improving as the economy improves. They also target the middle class if it grows, and the top class if it improves anyway.
Okay, interesting. Thank you. And perhaps just to hear your thoughts, we have seen that the group which is overtaking, they're actually injecting, I think, close to 4 million, about 4 to 5 million into this new company. Of course, in a piecemeal manner, right? Trying to restructure this company. Do you subscribe also to Ian's viewpoint in terms when it comes to the plan? Because they've highlighted that they want to remodel and they want to restructure the old model that Truworth was working on, and to streamline it and to integrate it with Valvin Investments. Your thoughts?
I think if they manage to save those low earning
Income earners.
low income earners, I think their plan will be viable, since like what Ian said, the disposable income for the majority of Zimbabweans is very low. So I think for them to be competitive, they need to sell affordable clothes, which means those low earners. Because if we check the growth of our economy is very low.
Single digit,
So to meet the demands for high earners, I think they're a little bit far-fetched now, given the competition they face from Edgar's and the informal sector.
Okay, thank you. So as we conclude, now looking at these counters, these are the counters that are in the retail space, and we have tackled at some of the counters, some which are still listed, and some like Truworth which have delisted. So looking at the sector just going forward, I just want to hear your views and how you foresee the sector going forward, because there might be some of our investors that are looking at this show. They just want to probe into your thoughts and hear what are your thoughts like. So going forward, let's start at the food sector. That's where Zimbabwe is in. That's where even TM Pick and Pay, we've also seen them publishing their financials, and we've also seen that most of all these retail sectors, they are being affected one way or the other by the operating environment, whether be the issue to do with exchange rate, issue to do with the inflationary pressures and whatsoever, right? But forward looking at 2025, with the RBZ continuing with their tight monetary measures, how do you foresee the sector panning out? Do you foresee some of the remaining listed companies actually delisting? Do you foresee some of those remaining operational? What's your thoughts?
You know what? Our operating environment in Zimbabwe is in bad shape, given the presence of informal sector. If you look,
but one would say the authorities are now trying to formalize the informal sector, as we have seen the Minister of Finance introducing some of those measures to formalize the informal sector. What would you say?
I don't think it's practical for now, given the percentage of informalization in Zimbabwe versus the formal sector, because this economy is almost 90% informal. So to formalize those informal is a mountain.
Take a bit of time.
Yeah, it's a mountain to climb. So the competition they face from the informal sector is very hard, because those informal sectors, they don't even pay dues, even though the government is trying to put some measures on those border posts. But the issues of corruption, those resimra officers, you will be surprised to see a loads of groceries pass through those border posts. You wonder what's going on with those regulations. Are not properly regulated, maybe because people are hungry of money in their pocket, so they opt to do some illegal deals with those revenue officers. So I'm sure the competition is very stiff, and the government must do something on how to regulate those informal sector.
Okay, thank you. Interesting. And Ian, your thoughts on investors, somebody who is currently holding shares in the retail companies that are listed, or somebody who is actually contemplating whether to buy shares. What is your investment recommendation, or what are your overall thoughts?
Okay, thank you, Kuda. I think the retail sector will continue to struggle as long as we have the parallel rate and the official rate deviating. The premium currently is at 44% as of yesterday. So, and we realize that the formal retailers they sell most of their goods in ZIG. And then when they go to purchase from suppliers are demanding USD upfront. Yeah. So with suppliers demanding USD upfront, how you match your proceeds and actually to try and meet your obligations from suppliers is very difficult. Yeah. Where are you going to get that foreign currency? And for retailers also, by law, they should sell their goods at almost the interbank rate. They are not allowed to charge the parallel market rate. So it's going to be difficult, but I think, we have seen TM Pick and Pay is surviving.
Yeah, sure.
They released their third quarter update, and they are saying their volumes were up 7%. And also their USD revenue was flat at about 18% year on year. So I think there's hope for Zimbabwe. I just think the new management coming in, they've experienced in turbulent times. They steered the ship in 2008, 2009, 2010, and the company also grew from 59 stores in 2013 to around 70-something in 2023. So I think they'll actually navigate these challenges and improve the situation. But it's a matter of saying when and how, because the Zimbabwean environment changes every day, and it's very complex. With the new taxation measures coming into place, competition from informal, which is almost 90%. So it will be a difficult year for them, but I think there might be some light at the end of the tunnel.
Wow, interesting. Well, on that note, thank you, viewers, and we do hope that you will join us in our upcoming episodes as we continue to look at our stock markets, as we continue to deep dive, to analyze, and to unpack issues that affect our listed counters. But well, for now, we thank you for your time, and we do wish you to enjoy the rest of your day. And from myself, both of my fellow colleagues here, and the crew behind the scenes, we say bye.